Okay, so welcome to your second session of the Washington County Business Challenge. I'm Kathy Lowe. I'm the Executive Director here at Virginia Highlands Small Business Incubator. If you have questions about last week's sessions, we will have a Q&A later on in the evening. But tonight we have your expert panel, and so we want to introduce Brian Wampler with Wampler Insurance, Mike Spiegler, CPA with Spiegler Blevins, whose office is across the street, and John Martin with PennStuart, and they have been longtime supporters of the Business Challenge. They will answer any question you have, and of course the winning startup receives free services from Mike Spiegler and John Martin, so they go above and beyond to contribute to the community that they live and work in. One housekeeping item. Tonight, before you leave, you need to declare whether you are competing as a startup or an expanding business. So on your sign-in sheet, just right beside of your name, put startup or expanding. And otherwise, I'm going to turn it over to the experts.
And what would you like for us to start with,
I want
Ms.
you to
Lowe?
start with whatever you want to start. Would you like for people all around to?
Yeah. Why don't we start with that? Have everybody introduce themselves and tell us a little bit about what they're doing, their business is. How about you, Hunter?
My name's Hunter Danhart, local businessman. I already own a couple businesses, but opening a storefront on Main Street, hopefully by April.
What are you going to be doing?
We're going to open a mercantile and slash furniture store.
My name is Frank Cardinelli. I run a small business called the Resell Shop. I do small electronics repair and download training. It's over in Washington County, Virginia. That makes it.
My daughter.
Jenny Carlisle. I am opening a craft and sewing shop called Crafts on Me in the space that was Janine's Quilt Shop, and it is opening in a couple weeks on February 15th.
I'm Amy Smith, and this is my husband Jared, and we just opened Solstice Nutrition here in the incubator on January 1st, and we provide nutrition education and counseling services.
My name is Jennifer Cholly. I have started a business yet. I'm still working on that. I have a farm, and I want to sell live plants at different venues, maybe the farmer's market.
My name is Allison Burris. I am looking to start a child care center in the Abington area with infants and toddlers.
I'm Christina Clark Rufus. This would be a startup business. It's a vegan farm to table, concentrating on microgreens. I would be doing this with my sons.
My name is Hannah Aiken, and I'm opening up a store in Abington that will carry arts and craft supplies, mostly fine art supplies, and it's going to have a focus on eco-friendly alternatives.
My name is Ryan Henderson, and I have created an education program that goes into different schools and does things, and because I don't have a storefront, I am observing.
My name is Mac Owens. This is my partner Grayson Toller. We will be starting a non-emergency medical transportation company here in Southwest Virginia.
I'm Jean Barker. I'm going to be starting a cut flower farm.
Alan Necessarius, my wife Jamie. We're a startup business, Appalachian Baits, which is we started out as a trout bait, and we're going to go retail, internet, wholesale, up and down the East Coast, West Coast, and hopefully work our way to the middle.
I'm Ashley Jade. I'm just filling in for my fiance, Shane Grossclose, who has stomach virus. So he is doing Greendale Turf Solutions. It's going to specialize in pesticide applications for residential and homes, and he actually just secured the Emory and Henry College application from True Green. So he's pretty much going to do what True Green does, but he has experience with the 2 or 3 country clubs in the area working for them.
My name is Pauline Wilson, and I am an existing business here in Abingdon for 9 years, and I am just interested in how to expand my business, what my options are as far as a business owner, to provide a service for the community, and just more or less just how to expand and get more financial knowledge, more business knowledge, to have my business work for me instead of me work for my business.
My name is Jody Blazers, my husband Kevin, and we are starting at the Spiegler Transportation Service.
I'm Justin Pierce, this is my wife Brittany. We have an existing outdoor business already that we provide interpretive guided hiking and biking tours for our region.
Is there a back row? Is that it?
My name is Faye Hill, and I'm just an observer right now.
Well, we're here for all kinds of questions, insurance, legal, tax, accounting. We're here to hopefully help you tackle any questions or concerns or anything you can throw at us. So I'll turn it over to you guys.
I'll start. I have a concern or question about whether to become an LLC or a sole proprietorship. I own a farm, and right now, I'm using that farm as my business, but under my own Social Security number. So, do I need to establish a business? I mean, does it even need to be an LLC or a sole proprietorship? Can I just continue to do business as a farm?
You want to tackle the legal aspect of that?
Yeah, well, those are always good questions, and we try to get to those, but we have not rehearsed an answer, but we probably should, because I think those are, that seems to always be everybody's initial concern. So if you don't mind, let me ask you a couple of questions. With regard to the farm, do you own the farm?
I own the farm.
So one of the reasons that, from a legal perspective, that we always look at the type of entity, if you establish a legal entity, and when I say that, there's a process through the State Corporation Commission that you have to go through to create the legal entity and to make it legal so that it has the potential to have legal liability. So when you establish that through the proper channels, through the proper forms that you have to go through, then there's a follow-up renewal process each year. There's the possibility for that legal entity to own property or lease property. And so what you want to look at, from my perspective, if you walked in and sat down and talked to me, one of the things I would want to look at is how can I protect my farm no matter what I'm doing. So you're selling, tell me again.
Plants. I'll be selling live plants.
Okay. So hopefully there wouldn't be a lot of liability exposure there.
Probably not at the location of the farm, because I'm not going to be doing business at the farm. I'm going to be taking those and doing direct sales at farmers markets, flea markets, whatever, that type of thing. So I won't actually be doing business at that location.
And that's a good consideration. But anytime you're producing a product and putting in the stream of commerce, there's that possibility that somebody would have an adverse consequence with it and then look to you for liability. So the first thing you look at is, can you remove the farm from the liability, the chain of liability? And, in your case, it might be really hard because you own it, you're using the farm for your own property. So the legal aspect of whether or not you're an LLC or, or how whatever entity you decide to go with probably isn't as significant as then the tax consequences, which Mike will tell you his thoughts on that. But it doesn't matter if you operate as the LLC and you enter into contracts to buy fertilizer, for instance. Typically for a small startup company, it doesn't matter what you use as the entity that you work with. because most of the people who are going to deal with you are going to want personal guarantees. But eventually, the LLC will gain its own reputation, it'll gain its own, it'll gain its own creditworthiness. And in that sense, the LLC becomes the one doing the business. And that does insulate you then from, say, a judgment where your personal property might be subject to attachment. So those are considerations for the long term. The immediate effect, I think, for a situation like that where you own the major asset, you're using the major asset to make money, and then you are the one, in effect, working, are probably not as great as the tax consequences. But, I think in today's world, most people are going with LLCs because there's another aspect of that. They're easy to manage, they're a little easier than corporations. Plus, then you can sell your interest. It's feasible that you could sell your interest to somebody else and then lease that farm that still belongs to you, and that business would just keep on going in the event that, you got sick or something like that.
Okay, so an LLC is probably the best option. I haven't really, like I said, there's been some discussion with other people about whether it should be a sole proprietorship or an LLC. I understand that there are ramifications, legal ramifications of going with a sole proprietorship.
The one thing I will tell you, even though we kind of glossed over it, but there is the potential that an LLC can create a layer between you and somebody who could potentially be coming at you legally. When you have sole proprietorship, there is none of that, never, and there never will be. So, everything you own is potentially subject to attachment by creditors, that sort of thing. So, if you ever think that that's the direction you're going to go, you might start out now with an LLC for a variety of reasons.
Okay.
So are you the only owner?
I am the only one.
Okay, so, if you decide to go the LLC route, you'll be a one owner LLC or a sole member LLC, which in the eyes of the tax law.
I can get you an answer, but I don't want to tell you wrong. I can give you an answer now, but I don't want to tell you wrong.
There are affordable plans out there for small businesses, and do you still have to offer?
You're not required to.
Okay, so this.
Not until you get to,
Heard
I
about this
don't even
Oklahoma
know,
law and
50?
stuff. If you have one full-time employee, you have to offer insurance.
Yeah.
I think the Affordable Care Act threshold now is 50.
I think it is 50.
The way you read it, it was more than 2 employees, so it triggers a 3. Is that?
That's for
What
workers.
the,
That's for workers.
That's for workers.
for workers' comp, so meaning if you have, people get this mixed up all the time, to say that you and you have another guy, you're still covered. But if say you have another guy that's part-time, your car, even though you're the owner and you don't want to be included on the workers' comp, you're still counting the number. That makes sense?
Yes.
Yeah, and I will tell you, for purposes of sole proprietor versus LLC, as a sole proprietor, you don't count towards that 3 or more employee threshold. But if you are an LLC and you are the owner of that, then you, under certain circumstances, you do. If you're an S corporation, you automatically do, because the State Corporation Commission rules require that an S corporation have at least one partner or one officer. And so even if you're the only shareholder and the only officer, the corporation is the employer, and you as an officer automatically count as one for the workers' comp
Yeah,
census.
that makes sense.
So you have to kind of keep that in mind.
As a business owner, I know it would help with some of these people. I have to carry workers' comp with my guys no matter what. Some of these businesses that we work for, you have to have workers' comp on them just to even let them on their property.
And that goes back to what Mr. Wampler was saying about, when you get into working for somebody else, you count toward their work comp threshold census. And so if you have an employee, so it's just you and I'm working for you, and you don't have workers' compensation, and we're working at Spiegler's place, if I get hurt and you don't have workers' compensation, I get to go up the ladder to Spiegler. So his workers' comp, even though he's paying premiums based on the number of employees that he has, suddenly I'm charged to him. And so a lot of contractors have to verify workers' comp coverage to the people that they're doing the contract, and it's stipulated in the contract. that's not uncommon.
I know it would probably help some of these people, if they have employees going out and doing jobs, you have to have workers' comp on them to be able to do some of these jobs.
It's expensive. I mean, the risk, you know.
It's definitely something you want to have.
Yeah.
It's worth the.
I have heard of a thing called homesteading to protect your home. Any reason that you maybe go out of business and the bank comes after you or whatever. Is this a thing that happens in Virginia? I heard about it from someone in California, so this may not be even a thing. You've never heard of this?
The area that I think you're referring to is bankruptcy.
Okay.
And so there's a provision in the federal bankruptcy. So bankruptcy is federal law, it applies equally in every state. But there's a little carve out in the bankruptcy code that gives each state the opportunity to create its own homestead exemption. And so what they say is, it's just referred to as a homestead exemption. But what it says is, it's kind of a wild card. You can put this much property under the homestead category when you file for bankruptcy, and you can protect that. In Virginia, I've forgotten what it is, it's much smaller, but in Texas, for instance, if you own a house, you can homestead the house, or it used to be you could homestead. I used to do some bankruptcy work, but so it's different in California. Each state is different. It's fairly minimal in Virginia by comparison to other states. So it doesn't necessarily provide you a great deal of protection.
As far as who he needs to contact, like he has all those certifications, pesticide, all that stuff. But as far as like for the town, I know we put the address as like the business as our home address, which is in town, but we're getting the fertilizer to the farm that I own, which is not, it's in the county limits. So he was trying to figure out if we would have been better off to basically put our business in the county. That's one of my questions. Like, where would he need to get his certifications? Like, what does he need to do to be able to apply pesticides in the town of Abingdon? Does he have to go and get different certificates, or does the town make him go? I know, like, if you do something sometimes, like, they make you have a yard sale, you have to go get a permit. I just didn't know if he had to have a permit to be able to do people in the town limit.
I'm not sure what Abingdon's requirement is. Generally, you know, contractors working within a locality are required to adhere to that locality's licensure requirements. And, you know, in the town of Abingdon, I think it's $20 plus 20 cents per 100 or something like that. It's not real cost prohibitive.
So he just needs to come see you.
I'll help you.
Okay.
I've got a question regarding payroll. You mentioned earlier, as you remove profits from, we have an LLC, as you remove profits from that business to pay yourself as a salary, is it advisable to use a payroll system to do that, or can you just simply withdraw and report it as salary?
Yep. Well, payroll out of an LLC, payroll to owners out of an
There's only
LLC.
the two of us as.
Are you both
our
owners?
entire staff,
Yeah,
yes.
we're both owners.
So, you know, everybody wants to call that a gray area, but it's not. As owners, you're not allowed to take payroll. You take a guaranteed payment or just a draw of profits. So you don't really need to jump through that payroll hoop unless you have other employees.
Okay, so since it's just the two of us, we would be able to bypass that, because it's a withdrawal, but it would still report as a salary on our protection.
It would be, well, depends on how your accountant does it. It would just be profits that would be exposed to self-employment tax, or it'd be a guaranteed payment, which would be exposed to self-employment tax in and of itself, in addition to the profits.
Okay, in addition to what he said, so if I have employees, of course, I'm gonna have a lot of employees, but if we're working in the center ourselves, do we not consider ourselves on payroll for that week? A normal?
Not if you're an LLC, no.
Okay.
If you're an S corp or a corporation, yes.
Okay, so if I paid myself for working 20 hours that week,
Right, you just take a straight check, and then you're required to determine on an annual basis your estimated taxes and pay them in quarterly.
so I can't pay my taxes like my.
Not through
employees.
payroll withholding.
Okay.
But if you have other employees, you do that.
I mean, if you have other employees, they're on payroll, but you're still not on.
Okay.
Yeah,
So you don't
because I
combine.
have a lot of employees, so I pay them normal, like I normally would, using my QuickBooks and I subscribe, so, you know, all my taxes should be right and
Right.
everything. But I can't do that for myself or my partner. If we're both owners and we draw 20 hours a week, we just write ourselves a straight check for 20 hours a week.
In the eyes of the tax law, you're either a partner or an employee, and you can't be both.
Is there a payroll program that you all recommend? That, you know, that, well, for you, and in particular, it's more like a you question. But is there a payroll
Yeah, I mean-
that you recommend that would keep up with that stuff? Because I know
Yeah, I mean,
he's
you
not
need to
very-
go to a program that has full, what we call full service, so one that not only calculates your payroll, but makes all your monthly and quarterly tax payments and files all your returns for you. Generally, QuickBooks Online payroll, full service payroll is the most predominant.
I have a business, a software business, which I've been running for like 11 years. And I started out as an LLC, and we weren't S-corp or anything. We just found ultimately it ended up being easier for us in the long run as we grew to be an S-corp because of those things. And even doing, I did QuickBooks, but even doing QuickBooks, I also found it was very advantageous to have an accountant. Because although those, and I know I'm tooting your saying, I'm just saying from being in business, you feel like you're doing everything right, and you're trying to do everything right, but it's really good to know that you've got somebody that has your back and that you can go to for expert opinions, because I'm not an accountant. So I found that much easier to have both. Safer.
Yeah, I mean, you know, from our perspective, we want educated clients. We want clients who aren't afraid to ask questions. And, you know, I think the people at this table will probably tell you their most successful clients are the ones that aren't afraid to retain, you know, competent professionals to handle all the issues, ask the questions, and make sure you're going down the right path. And we're good, you know, we just have such a wide variety of business knowledge. You know, we're good to, we've seen everything. We're good to bounce ideas off of and test theories and things like that.
Saved me a lot of money. That's what I just told you.
Good.
I'm telling everybody, it saved me a lot of money because I tried to go through LegalZoom originally to kind of set everything up. And I found out that when I actually got an accountant, a good accountant, that they helped me so much more and saved me a lot of money in the long run.
Hopefully your accountant's not practicing law.
No, he's a good guy. That was important.
I want to say one thing for all the new business startups. Something that's not been covered, and this is my 3rd year coming here, but something to be aware of. When you go to file for your FEIN to get your number, either through the state, federal, the day that you, according to them, the day that you file for that is the day that you're in business. That's one of the first things you do when you set your business up, is get that, because when you go to developing or opening up a bank account, they want that, your business bank account. But according to them, that's the day you started doing business, whether you were open or not. Why I'm telling you this is because about 90 days to 120 days later, you're going to get a notice in the mail saying that you owe all these back penalties and all this other stuff. Just remember, you got to fill out a ST9. You can write this down. You can do it electronically. But you will get those letters in the mail. You have not filed for this month, this month. Well, I'm not even open yet. Just wanted to make sure y'all be aware of that, because that did happen to me when I first opened the business 3 years ago. But you'll have to start filing every 30 days to get that. Check with the county. Down here at the county, if you got to pay a county tax, like the campground that I'm at, that's enrolled with the state tax. So when I pay my state tax, the county automatically gets the 1% off of it, or whatever the percentage. But don't get caught in that snowball effect, because even though you're not open, you still have to fill out that electronic. You can fill out electronically ST9, file it, and it's done. That way you're not going to get hit with penalties without even being in business, because it happened to me. Now, the state of Virginia, they let me slide on it because my first offense, I was new business. Federal guys wasn't so nice. I had to pay $10 for every month I missed, so just putting that out there, something for the new startups.
Because you missed filing, right?
Didn't even know I was supposed to file, it wasn't even open yet. I just filed for my number, and they counted that as the day that I was actually in business, when I was trying to get my business logo, my webpage set up, I was trying to get everything done. But that's the date they use. So just remember, once you get your FEIN, you gotta start filing. Or you're gonna be paying $10 a month.
You have a question, Wally?
Yeah, I do, about insurance. I think it's been a while since we were on that topic. So, I don't have employees, but I have, a couple instructors, teachers contracted to come in and teach a class. They get 1099s. What is the insurance that needs to be carried in order to have them covered? I don't have to have workers' comp, right, because they're not actually employed.
Let's read that definition.
What kind of teaching are you doing?
So sewing classes primarily, various craft.
For workers' comp purposes, it would be theoretically possible, are you a sole proprietor?
I'm an LLC.
I mean, it's possible that they could suffer an injury, and they could come back on you. And if you didn't have insurance, then in Virginia, every policy that he writes, a small portion of it goes to what's called the Virginia Uninsured Employers Fund, or the UEF. And if you have someone who decides they want to, you think they're a contractor, the 1099 doesn't determine. And you were talking about the trade, business, or occupation, right?
Yeah.
Is that how you measure it when somebody comes in?
Yeah, like, I ran across this not too long ago, and I'm thinking you would have to carry them on workers' comp to be on the safe side, because if they get hurt, it's like, you got them to come teach a class, so they'll be like, hey, Jenny, I got hurt. You gonna help me?
Okay.
So I would double check with your insurance agent
Yeah.
to make sure. But when I came across this, I'm 99.9% sure we had to include them on payroll, because at audit time, usually, say your policy runs January 1st, 2020, January 1st, 2021. Well, you had to do an audit. Usually you do an audit every year, so they'll ask these questions. So either you try to include it on payroll now, or at audit time, you'll pay it for it then.
So for work comp purposes, I will tell you that if your job is, do you teach as well? And you're hiring other people to come in and teach, then they are doing part of your trade, business, or occupation. You know, the work that they're doing and you're doing is not that distinguishable. So they're doing part of your trade, business, or occupation. And I do a lot of workers' comp work for the insurance company, so we defend these cases where people come in. And I will tell you, in that situation, I would have a hard time saying you're going to get out from under an insurance carrier, because they look at what's called the control factor, and how much do you tell them to do when they teach. My guess is you probably are hiring skilled people, so you don't tell them how to teach stitches or the fabric or things of the substantive nature, but you're telling them when to be there, you're telling them what to do with your clients, right?
Right.
So my guess is that you would be considered to exert a lot of control over those folks, and that's really, that typically for workers' comp purposes, those two factors come into play a lot.
Okay.
And then the other thing
So
is,
how they are paid doesn't really come into it.
and it really, for all of those areas that we talked about earlier, you know, what you decide to pay them and how you decide to pay them and treat them for tax purposes, any of the governmental agencies that are looking at that can disregard that and say that's
bad fact.
Got an offshoot question, because I'm gonna be in a similar situation, except that I was looking at, instead of paying them through a 1099, letting them be the collectors of the class fees. Maybe I collect it and then cash them out at the end, or whatever, however that needs to work. Is that different in any way? Is that legal? Is another question?
Well, I mean, so, tell me again what you would be teaching?
We'd be teaching crafty type classes, paint, sip and paints, things
Okay.
like that.
Okay.
And I'd be bringing people in who would already know all this, already have kind of their own setup.
I mean, I think if you just, you know, you have the same scenario, you bring in somebody to teach this particular skill set.
Yeah.
But it's your business that draws the people that pay the tuition, so to speak. I think if they suffered an injury and came back on you, you would probably be exposed. And what happens when you are, and this is always the problem, if you are supposed to have insurance, or even if you're not supposed to have insurance, in order under the Virginia Workers' Comp system, and the work comp system is its own court, so typically in most cases, the only way you find that out is to take it to court. So that means that even if you get off the hook, you probably incurred some attorney's fees to get to that decision. So, you know, I would think in both of those situations, and I leave it to Ms. Wampler, but I mean, those are the types of low-risk jobs, right?
Yeah, workers' comp for that type of risk shouldn't be that expensive.
Sure.
And let's say, I mean, example is like you're a carpentry contractor and you use a sub that does the siding of a house, and he has his own workers' comp. Well, if he gives you a certificate of insurance, shows that he has workers' comp insurance, then you wouldn't have to include him on your insurance.
And workers' comp is based on, one, the payroll, and then two, the risk factors. So, you know, high-risk job like an accountant, you pay a lot of, you pay a lot of insurance for that. But, you know, if you're running a job that typically doesn't have a history of a lot of injuries, then your premiums are not going to be that high. So worth the expense.
I always say you'd rather be I know you have money out of your pocket, but it's better to be overprotected than underprotected. Because if you have luck like mine, something's going to happen. That's just how my luck is.
I got 3 paper cuts and stapled my fingers back.
See? Full disability, I'm telling you.
Tagging on to my sip and paint thing, I'm looking at getting a BYOB liquor license because they will be bringing in their own alcohol to drink while teaching the class. And I just have no idea what those implications are. And I know the BYOB laws just changed in Virginia. Is there any information that I need to know? Is there a place I need to go to get this information?
You need to be a contractor.
So who's the teachers are bringing their own?
No, the students.
The students bring their own.
You know,
Whoever's
blind
paying a fee to paint, so they're paying for the class supplies.
Sounds like a lot of legal forms have to be signed every time they come in.
Waiver.
Yes.
Now I hear that waivers don't hold up in court, but.
Well, they do indicate assumption of
Sure.
the risk.
Okay.
I'll be honest, you know, you probably would want to start with an anonymous phone call to the ABC, Virginia's ABC.
Yeah.
And I say that sincerely because, you know, there are some good information, you know, there's a lot of good information out there. And like you said, the laws are ever changing on that area, but honestly, I'm so unfamiliar with restaurant type laws, I wouldn't even want to try to tell you.
Sure. Thank you.
For nothing. But your class sounds great.
Yeah. Yes. I mean, that could be a huge liability, potential liabilities, because if they bring their own wine or beer in, but they get a little too intoxicated,
Sure.
and they have an accident, they say, well, and they do the investigation, then you could be potentially brought into it. So that's a huge, you just want to make sure you cross your T's and dot your I's on that.
Yeah. And the one thing I would tell you is, I have heard of that on the rise. So somebody's been down this road before.
Yeah.
And one thing I've told everybody in the last couple of classes is, I've been lucky enough to be involved with you all. For all of you, for whatever you're doing, there are trade groups that exist, and they are the absolute best source of information, because those are the people who have been down that road. They're going down the road, and they have great stories to tell. A couple of years ago, my wife and I went to a bed and breakfast in Maine, and it was just a teeny tiny place, but they were undertaking the purchase of these just massively expensive mattresses, and we started talking to the folks about how they do it, and they were involved in a trade group for all of New England that would pull together. And so when they decided to buy these, $1,000 mattresses, they were buying like 500, 600 at a time, because they all timed it according to the trade group, and their collective savings was huge. And that was just one example. So, you probably run into a trade group with, an accountant or an attorney or somebody in the industry that, does this on the side, and they may have great immediately relevant advice. So look online for those things.
There's one in Bristol. I don't know if she would.
Yeah,
would
there's
she,
Tennessee, I believe,
Yeah.
so.
Well, I think she lives in the state of Virginia, but she might be able to give you like
Sure.
some information.
Sure, but it might be Tennessee liquor laws, which is just completely different from Virginia, so it might be different.
Yeah, Tennessee, each state's different, so
Yeah.
even if you live in Virginia and your business is in Tennessee, you have to go by Tennessee.
Tennessee laws, yeah. It's something that hasn't really been done in Virginia a lot, from what I understand, because of the liquor laws here being so strict, so.
What are the insurance issues associated with deliveries? I've never been in a business that did deliveries before.
Well, if you have,
Like the vehicles involved and.
yeah, I mean, you have to make sure you have the, that on your insurance, because if you have an employee is using their vehicle, then they cause an accident, but they wouldn't have been in an accident if it wasn't for you making the delivery. So you just gotta make sure that your policy's endorsed for delivery.
What if it's a company vehicle? If you address it?
But if it's a company vehicle, then that's a whole different story. Because that company vehicle should be on the company insurance, the business insurance policy.
That's what I'm thinking, yeah, I've just never had to do that.
Yeah, and usually, I mean, there's a couple ways. If you have a policy that say covers your contents and liability, you can endorse it that way. Or most of the time, you can put hired and non-owned coverage on your commercial auto policy to cover people that use their own vehicles. But if there's a company vehicle and they're listed as a driver on the policy, then, and they're doing the delivery, then you should be protected up to whatever limits are on the policy. In today's time, probably do $1 million, especially a business. I would recommend doing $1 million combined single limit, and maybe look at a BCL, a business catastrophic liability policy. Because I hate to say, I think I said it before earlier today, it's a sue society out there, so people will sue for anything.
What was the last thing you said? Multi-million dollar or $1 million policy that's.
Yeah, combined single limit, like on your auto policy, and the BCL, business catastrophic liability policy. It's a separate policy. It just gives you extra liability protection on top of your auto and your business insurance.
Is that kind of like an umbrella policy?
Yeah.
Yeah.
Yeah, some people call it BCL, some people call it umbrella, but it's basically the same thing.
In the same line, sorry.
I was just going to say, if you're, for any of you that would deal with an agent, I mean, when I say an agent, I mean, if you take your business and you ask somebody else to do this for you, that person becomes an agent for you, and they theoretically extend liability through you. It's called vicarious liability. So you run into a situation where, you know, your choice of someone to do delivery work for you could get you sued.
Mhm.
And just like we talked about earlier with contractors and the fact that, you know, generals want subs to show proof of insurance, you know, don't be afraid to ask that. Don't be afraid to ask for driving records for these folks. You know, you don't want someone who's just gotten their license back after a year's suspension, DUI or something like that. You know, take the time and ask those questions. And you can even, in certain insurance situations, you can even ask to be notified if that coverage lapses. You know, if you're having somebody deliver for you on a regular basis, you can ask that their carrier notify you by virtue of your agreement, so you know
Be listed
they.
as additional insured.
Yeah, so you know, and I would defer, but I'm just saying, we see this a lot, because then you keep knowledge not only directly through them, but every now and then things happen and, you know, lapses occur and that sort of thing, so.
Where's your business located?
Washington County.
Whereabouts?
It's out in the Tyler district.
Are you going to be delivering across any state lines, or?
It's possible.
Okay. So just know that that the locale that you're delivering into will determine the tax ramifications of that transaction for sales tax, maybe even lead to some meals, sales, I should have said sales and meals taxes, as well as, you know, if you do it regularly and your volume grows, it might lead to, let's say you deliver into Tennessee, to having to file a Tennessee tax
You have to
return.
file tax returns in every state you do business in. Yeah, I got into that one. And the other business.
Same thing with the business license.
Right.
Contractor, wherever you're doing business, you have to get a business license in that community.
You know, like in the community, like if you're in a city or a
If you're
county
in
or.
Abingdon.
Oh, boy.
Yeah.
Okay.
If you're going down to Bristol, you would need to file a business license in Bristol.
And John, this brings up, Brian, every year we have this, I've been using my personal vehicle. When do I turn that into like a personal expense? And I know we touched on it a little bit, but, you know, I guess anytime you've got a piece, you're making a delivery, you're doing anything on behalf of the business, that automatically turns that car into a business vehicle, so.
More than likely, you probably
Well,
need a commercial auto policy instead of a personal auto policy, because you're more using it for a business than for personal use. Personal use is like driving back and forth to work, or if you're retired and you're just going about day-to-day living, that's wholly different from like if you're hauling people around. You really need a commercial auto policy, because it's not meeting the personal lines guidelines, if that makes sense.
How does that relate to if you're not delivering goods, but you're delivering services? Like I would be going into a school, if I contract with somebody else, they would be driving to a school. Is that along with kind of like the same idea?
If it's just, like, if you're the only person in the business.
Right, yeah, right now I am, yeah.
Yeah, I mean, you probably should be able to endorse your auto policy for business use.
Okay.
But if you say you have employees, then that's,
Yeah,
I mean,
no,
yeah.
Maybe one day. Maybe
Yeah.
one day.
I mean, we always tell people, like, this isn't about business, it's about personal. You say that one of your friends borrows your vehicle, say that his car's blocked in, your car's behind him, and he's like, hey Matt, can I borrow your vehicle? Well, you let him borrow your vehicle and he has an accident, guess what? Insurance follows the vehicle, so guess who's going to get sued? Whoever, the insurance name and whoever owns the vehicle. So you always want to make sure you trust whoever you lend your car to, trust them with your life, because everything you work for can be taken away.
I used to provide in my existing business, I provide a service and but I do a lot of flying, so I'm not in my home state. And everywhere I go, I get rental cars or whatever to get back. I also have to have that on my policy to cover me in accidents with rental cars, because that's something that happens in my business all the time. And international too. You got that.
I mean, usually there's a gray area. It's like if you can use your vehicle in a business like you sell real estate, but if with the companies that we represent, if you pull a trailer where you haul stuff in the back of your truck, especially a trailer, if you're pulling a trailer, then there's a gray area, and it really needs to be on the commercial auto policy, because it's not really a personal auto due to the fact you're pulling a trailer for your business.
Is there a certain percentage of usage that you can use your personal vehicle for to say that it's business? I mean, is there a certain level of?
It's either
like,
you're
is it
using
like
it for
all
the
the
business,
time,
or
or
you're
is
not
it just
using it for a
once
business.
week? Or, you know, well, I mean, I
It's
use
either,
mine for
yeah,
mine.
it's either black and white. It's
Okay.
either you using your vehicle or you're not.
Because I do.
Yeah.
So if you put it as a commercial auto policy, can you use that car payment on your taxes?
I was waiting for that question. Because everybody has a vehicle and everybody wants to write off their vehicle. But just know, there are two methods to, I guess, garnering vehicle deductions for business use of your vehicle. One of them is that the business owns a vehicle and depreciates the vehicle and deducts all costs associated with the vehicle. The other method is that the business reimburses whoever owns the vehicle for their business use of the car. Now, both methods are based upon the business use of the car, which is based upon the percentage of business miles put on the vehicle in any given year to the total miles. So generally what happens is, we have a car, in all reality, and driving back and forth to work is not considered business use of a vehicle. That's commuting, that's personal use. But we all have vehicles, and we may drive them 5,000 miles a year for business use, but we put 15,000 miles a year on them for total use. And if you're going to try to write your vehicle off in your business 100%, it's going to you're going to run into limitations. I'm not going to go very deep into it, but you're going to run into limitations that are going to preclude most of those benefits. Generally, the most efficient way to take advantage of the vehicle deductions is to simply reimburse yourself for the business miles that you put on your car or any of your cars. And that business rate, I want to say it's 57 cents for 2020, 57 cents per business mile. Excuse me?
Yeah, you have to go by which year it is.
Yeah. Yeah. So, an example I just used, if you drove your car 5,000 miles at 57 cents, that's what, $2,850 that you can reimburse yourself or take as a business deduction on your tax return. Now, if the IRS decides they want to audit you on that issue, you have to keep some written contemporaneous records. In other words, where you went, how many miles you drove, and what your business purpose for driving there was.
When you keep those logs, my question is, what, because I have a business card, so the first office I go to, I can't count, because like you said, that's considered transportation to wherever to work. How far is the guidelines for the first, you can't count what it would be your first location or whatever, what a normal job would be. So we can't write off if we go to work. But what is that average? Would you know what the average of that would be?
Yeah, I mean, it's whatever you're computing to you work in multiple offices, is that what you're saying?
I do, but I'm just wondering for him, because he's going to be doing different states.
And he's doing, what was he doing again?
He's doing turf.
Okay.
Craft. But I just didn't know when he should be able to.
Yeah,
I'm
so
not gonna
basically
lie, I'm
it's
real
when
bad
he
about
leaves.
stopping in an office in Abingdon to get my credit in the morning.
Basically, is he driving his personal truck
Yes.
to work, and then he's driving it for all the businesses?
Yes.
So generally, once he gets to the office, he's going to meet clients or to get supplies or to whatever he does as a business purpose, he just keeps track of
Okay.
those miles.
That really helps us with QuickBooks. Every day at the end of the day, I go through, and it keeps up with how many miles I drive every day. And you can go in and do personal or business and pick what those miles are for. At the end of the year, it tells you how many you did for each.
Does it track off of your phone, your app of your phone?
Speaking of triggering mileage for business use, let's say we took our personal vehicle to a conference or nutritionist event, would that trigger under work miles, or would that be just personal use as well?
So you're driving from your home to a conference, you said?
Correct, yes.
That'd be business use.
That would be business use, and I think there's percentage, is it 50%? It used to be 50% miles.
It's
That might be
57,
business
if you're
use.
using the cents per mile, it's, I want to say it's 57 cents.
Oh, thank you.
So, we tell clients, a lot of clients, when you say, well, you got to keep a log, they say, oh, God, I'm not keeping a log. And you say, well, okay, well, here, if you don't, then at the end of the year, what we make them do is say, tell us your routine. What do you do? What's your routine every week? Well, I go to the bank every day. I go to the post office every day. And, once a week, I got to go to Sam's to buy my supplies. So add up those miles. How many weeks a year do you do it? Well, I take 5 weeks vacation, so let's call it 47. So you do the math. And then, then they say, well, I go to a conference. I go to 3 conferences a year. Where were they? Calculate the miles, add that on. So there are ways to recreate the log, and we've done it a lot in IRS audits. And as long as you're realistic, and a lot of times, you can go to your vendor files and, you find 15 Sam's Club invoices, so you went to Sam's Club 15 times, and whether or not that was on a Saturday or Sunday, sometimes you don't even look, you just list it, and hope the IRS doesn't really look that close. Because once you log it, that's all they want to see is that you have some kind of record. But, you can recreate those logs, but it's best to be proactive about it and keep it yourself.
Would you be better off buying a vehicle through the business and then use it for personal use on the side?
No, I mean, generally, again, as I said earlier, if you're not over 50% business use, then you're going to get cut down on all your benefits, and you probably end up paying, I don't know, more auto insurance for commercial policy than you do an individual policy.
Commercial policies on autos more expensive than personal auto.
And then I would say, if you're driving a corporate vehicle around on weekends and you go to sipping wine or sipping paint, all of a sudden you're driving a company car,
I will say for those that have Apple devices, I've used for years an app called Miles IQ. That's been really good, and you can, at the end of the day, you can go on there and say, this is for business use or this is for personal use, but also if there's certain business meetings that you go to often, you can go ahead and classify that as business. So it just goes on in there, and then at the end of the month, you can just do a report on, okay, I want to see all my business mileage, and it's worked great. It's Miles IQ. There is a cost to it. I think I do it annually, but I've tried a lot of others, but that's been about the best for me for my work.
I know what ours do the other day. I could post what job it was for too also. I could put in there so I can expense it for each job if you're driving.
What was the name of your app? I couldn't.
I was on QuickBooks.
Yeah.
It was our
That's
mobile
what I
app.
thought you said.
Is the app QuickBooks too?
Yeah.
It's pretty easy, you just hit plus and miles, it's really easy to work.
It automatically keeps up with, as soon as you get in the truck and pull out each day, it keeps up with your miles. At the end of the day, you pick business or personal. If you pick business, you can actually put it under a job or wherever you're going that day. So that it automatically puts it with that job.
Can you talk about some of the tax ramifications of running your business from your home or a home office?
Yeah, sure. So running a business from your home, I guess, gives you the availability to take some of your homeowner's expenses and apply them as tax deductions on your tax return. Generally, and I'll just hit it real simply, generally, you're looking at all the costs of maintaining your house, whether it's insurance, real estate taxes, mortgage insurance, maintenance, repairs. That goes into gardening, it goes into housekeeping, it goes into anything that you spend on your home. And those costs are allocated based upon the square footage of the business portion of your home to the total square footage of your home. The IRS gives you a safe harbor to use in place of that calculation. So let me just back up. So in the first scenario, you take all your expenses, you come up with your percentage, and whatever that multiplies out to be basically becomes a deduction on your Schedule C, or if you're filing a separate entity tax return, we actually have you pay that amount to yourself, and there's a reason for doing that. And we claim it as office rate. As an alternative, the IRS will give you, I think it's $5 a square foot up to 800 square feet as a deduction, or 800 square feet as a deduction on your tax return, just to sort of, really it's a free gift, because a lot of times, you know, most people have a 12 by 15 office, which is 180 square feet, and they have a 2,000 square foot home, so it ends up to be 9% of those costs. And those costs, you know, when you start adding utilities and everything, really don't generally get up that high. So a lot of times the safe harbor works best for you and saves you a lot of work.
I got a question about business owners' policies. I had read somewhere about you might get a discount if you pay your premium up front in full.
Well, it depends. The companies that we represent, they, if you make one payment for the year, you get a discount. But depends on what type of business it is. It's not, like sometimes it's a minimum earned premium. So it could be the same amount by making payments. So it's totally up to the insured if they want to make one payment for the year. But typically, I think, 7 or 8% discount typically.
To go back to the standard deduction that you were talking about for the home office, is $5 a square foot up to 800. Is that annually? That's an annual amount?
You're talking about the safe harbor home office deduction? Yes, it's an annual amount.
And
Now, I may have quoted you wrong on the amount. I just can't visual. I'm not in my tax season mode yet.
Okay.
Give me a couple of weeks. Yeah, it's on the. I can't even think of the form number right now. I'll let you know.
I have another question. And the answer may be no, but I guess get it right. Is there a scenario whereby a business might have or might host someone come in and provide an expertise and not have liability for that person as if they were an employee? For example, what if I didn't pay that person to came in and provided some information? What's that? Liability.
Well, when you talk about liability, it's just wide variety of what liability.
I don't know. If you serve a glass of wine, we know there could be liability there. So apparently there are all sorts of issues with liability. But yes, let's talk about workers' comp and anything else that I might not be thinking would be an issue.
Well, the question for workers' comp is, do you trigger the limits as far as the number of employees? So, do you have any other employees, or are you a sole proprietor?
At this point, LLC.
Okay, but how many employees? Just you?
Yeah, I'm just the only one operating.
So if your business then, and this would apply to the two other folks with the craft issues, depending on how many folks, but if it's just you and you have a business and you bring somebody, one person in, then you're not required to have workers' compensation insurance. But the question of whether or not they're part of your trade, business, or occupation really depends on what they do, because you can still have an independent contractor. And maybe they come in and talk about something totally different than what you would do. You know, you'd have to kind of look at all those on a case-by-case basis.
Okay.
But if your business is to provide
a round robin panel of experts each week or each month, whatever your cycle would be, and these folks come in, then
that's part of it.
That probably becomes what your trade business or occupation is, But, the classic consideration is if you own a business and say Mike has an accounting business. And as he said, tax season comes up, that's what he's going to do for a very long time. But if a window gets broken, he needs that window for his business, but fixing that window is not what he's going to do. So he's going to call in a repairman. That person comes in and that contract is
Their
for,
own stuff.
yeah. And so Mike's not going to tell him what to do. He's not going to tell him how to caulk the windows. He's going to expect to pay for a service, and that person is going to have independent judgment about how they do that. So that's like the farthest extreme. But the closer you get to telling that person, how to do these things, and then this is the 15th window we've addressed this year, this week, that becomes part of your trade business or occupation. So it's unfortunately, it's a series of gray areas, but you start with the extremes and you kind of work in. So.
Okay, so let me give you a scenario. What if I want to bring in someone that I don't have an association with, but someone who has expertise in an area that's not particularly mine to do a seminar for a weekend? They're coming into my space to do it.
And well, again, going back to the number of folks you have.
Right now it's me, but
Okay,
say,
so
maybe I do this twice a year with two different.
Yeah, then you're probably not looking at workers' comp requirements.
Okay.
But what kind of work are you getting?
Well, I'm doing health and wellness. And this
Okay.
is this would be a different branch of it. that I'm
Okay.
thinking about.
So an idea of where a different type of liability would apply, if you're doing health and wellness and you bring in somebody to talk about, some aspect of.
Dog training.
I said.
I said dog training. I just made up something.
Yeah, well, I was thinking of more or less, something along the lines of life coaching or something like
Okay.
that.
Okay.
And you bring in this person to talk to your clientele, and they come in and give the rottenest advice. You've facilitated that person to your clients, then there could be liability in that, and I'm
Okay.
really out there on the limb because you really need more facts like that. But the key criteria is you've made that person available to the people who do business with you. So some way, somehow, there's potential for you to be liable for their bad acts. And it could be more extreme depending on the circumstances and the facts and the information brought in, but you just have to be wary of that.
Yeah, thank you.
And that simplified home office method is $5 per square foot, up to 300 square feet, to a maximum deduction of $1,500.
300 square feet, okay. Thank you.
And if you have a home office, and typically on homeowners, insurance companies want to know if you have a home office. But if nobody comes in, it's just a home office and you just do bookwork, then usually it's not affected. But if you have type of business that people come into your house, that's an increase in exposure in your liability. So you need to make sure that your homeowners is properly endorsed for incidental business.
We were talking earlier, I can't remember who asked about, whether it's business or personal car, and we were talking about that sort of situation. One thing I would tell everybody, because there are so many horror stories out there, now as part of your business, being properly insured is one of the best steps you can take. But that doesn't mean you purchase the insurance and then forget about it and assume that that's covered. And we personally went through something like that with our law firm because, if I'm dealing with Spiegler's files legally, I have a duty to Spiegler. I have both a legal duty and I have an ethical duty to keep my license to protect his files, to make sure that they're not subject to any kind of outside invasion. So we've had insurance policies that have covered our computer systems forever. The nature of the game with hacking and cloud interference and things like that has changed, and it's changed the insurance industry, and it's changed what insurance companies want to risk and to insure for that risk. And so now it's become a separate policy to have your electronic measures protected. So, you know, we have business policy that protects us if our computers crash, but that's now a totally different entity or insurance policy than protecting Mike if somebody hacks my system. And in addition to that, to keep our law license, we have to demonstrate that we have taken due diligence approach to understanding where our risks are. So we've had to hire consultants to come in and say, you know, this is a bad way to do this. You need passwords here, that sort of thing. And the reason I bring that up is, you know, the things you rely upon to protect you in the business world, including your advisors, change. And, you know, if you're going to make it part of your business, then you need to kind of stay up on that. You need to make it, you know, you need to work with people who are going to call you up and say, hey, man, I know you deliver to this, and this law just changed, and you probably want to consider this insurance, or things like that, because, you know, it is an ever-changing process.
Hey, Brian, on that note, can you talk about cybersecurity insurance that small businesses can purchase and what's involved with that?
Yeah, like, depends on the type of business, like we represent Erie Insurance, and there's certain type of risks that they offer, like some kind of cyber security. So they ask if you have like a firewall, they ask if what kind of what you have in place for the protection, like a firewall. They ask if you keep socials or ID, credit cards on file, and but if it doesn't meet that risk inside the company, we can go outside and get like insurance through a provider that's all they do. But you just want to make sure that you are properly protected, like you have passwords, you got virus protection. If you have a business, you want a firewall, that stuff costs. You just want to make sure that for us, we try to go above and beyond, but cybersecurity it's getting bigger and bigger.
It's a big issue, and that's a good point that you brought up. Yeah, so, you know, traditionally, I guess general business policies just covered, you know, you really just thought about the data that you had in-house.
Right.
And, you know, we're a very technologically proficient firm in that we've been paperless since 1998, which just means we don't have file cabinets in our office. We have digital images of everything we've done since 1993 now, 1998. So, you know, as cyber theft has evolved, and as, you know, the need for cybersecurity and insurance has increased, you know, now we still have policies that cover us if we lose that data that's been stored, but we also have cybersecurity, which is a full disaster assistance plan where, you know, something gets, if there's a violation, that, you know, these companies come in, they take over your data, they send out all the notices, they send out all the offers of, you know, what's the insurance coverage they offer now that they advertise on you know, the $1 million policy. You know, they insure you, they give you, they give all the clients cyber coverage, LifeLock type coverage. So yeah, so, you know, if you have information that's on the cloud anywhere, whether it's credit card information, what they call personally identifiable information, Social Security numbers, financial information, you really need to look at that and close down those gaps. Use those complex secure, passwords and everything you do. Don't duplicate your passwords. We had a client just within the last 30 days. The bookkeeper used the same password for their QuickBooks as they did their email account. Mm-hmm. Their email account got hacked. The hacker saw the emails from QuickBooks. So the hacker went to QuickBooks and hacked into their QuickBooks. And the hacker went into their payroll and rerouted, changed the name on some employee, the name on some employees whose payroll had been completed but not sent yet. Changed the bank account numbers. So she came in, sent the payroll. A couple days later, she's looking at it and figured out something's gone wrong here. And basically, they caught it. But the fact is that she used the same password on 2 accounts. And you know, these hackers, these cyber thieves are, they don't play games. They know how to find things. They know how to get in, and they know how to make things disappear. And there's a lot of local examples of ransomware, where I think one of the localities, maybe even the Johnson City Power Board, had their data held ransom. So I mean, it's a big issue, and you need to protect yourselves. Technology is great, but you got to use it properly.
Especially if you.
Square, I don't know if you're familiar with that, the one where you plug it in your phone, is that a bad idea?
It's a cloud-based point-of-sale system. Square is going to have everybody's credit card information stored in the cloud, and they're supposed to have all the protocols on their servers, and they're at risk. I wouldn't think you'd be at risk if they had a data violation, unless somehow or another somebody hacked in through your account, through your password, and got into some information.
That's what I was thinking, if somebody got in through my whatever.
Pay attention when you use those services like that. It's one thing I will tell you, just kind of piggyback on what Mike said, whether you're liable or not, you potentially always could be. And I will tell you, for small businesses, the thing that I always tell my folks that I'm worried about is, it doesn't matter whether you're liable or not. If you go through the process of litigating it, you probably have suffered enough loss, So, look carefully at those terms of service. We're all so bad to just scroll to the bottom and, peg that I agree and then go on, because there's a variety of information in there. For instance, if there should be a violation of Square's data, and that affects your customer is going to be coming to you, and they're going to want to talk about this, and then they're going to want you to talk to Square. What Square does and doesn't do is going to be defined by that service agreement. And one of the things that may be included in there is that any breach you have, they will only indemnify you for so much, or they may agree that the only way you'll figure it out is to arbitrate it, that you can't take them to court by virtue of using their system. You agree to do an arbitration. There are just a variety of things that they provide, and that service agreement is basically a contract. So, and that goes for any vendor that you use, QuickBooks, anything like that. It's always good to print those, have them have them around, have a copy of them, because just because you can get to it on the computer doesn't, just try to keep those things. And that's true. What we were saying about the insurance and all that. It's now your business, and so everything involved in it is work. And if you're lucky, it's work that you really love and you really enjoy, and the things like keeping up with the papers aren't so distracting that it takes away from the art that you like to do and that sort of thing. But remember that it's still business on the end. Tending to your insurance policies, and we always talk about them like they're a garden. You have to look at them because they grow stale, they overgrow, things like that. But man, you never want to be without.
Yeah, I mean, we're paperless too, and we have a backup, so I hate to use the T word, a tornado comes through and destroys our office. We should be able to get a computer, download all the stuff, and we should be able to get everything that y'all, like whatever we had saved, back up. So we never had to use it, but that's what they told us. We pay for a backup system, so we're hoping that it works the way they said it is. If not, we're gonna have big trouble. We're gonna have a talk with the company.
You need to make sure your IT people are doing the restoration at least once a year.
Yeah. But with the cybersecurity, I mean, you just gotta make sure if you can afford a firewall, get a firewall. The more protection that you have, the better off you are.
Back to the employees. I am a self-employed or a sole proprietor. I have a hair salon here in town, and I have 2 ladies that do booth rental. In other words, they just pay me a set amount each week. Okay, so when I file my taxes, I file as my business name, and I use my social security number as my tax number. Should I get a tax number or continue using the social security number, being that it's just me and I pay taxes on what they pay in as their booth rental, as that, because that's income to me as my business? Should I leave it like it is? Should I go from the sole proprietor and do like the LLC like they did and have a little more leeway? Any other little benefits that would help me? How should I go about that? I mean, I do 1099.
As a sole proprietor, you and your business are the same person.
Right.
So it's your social security number. Even if you became an LLC and were a sole member LLC, disregarded entity, again, disregarded entity, and the IRS has flip-flopped on this over the years. At first, they let sole member LLCs get employer identification numbers, and then they didn't, then they did, and now they don't. So basically, it's your social security number.
So is it something I should keep, kind of like you said, keep a watch on if something were to change? Just kind of be mindful of, or is it just still okay just for me just to continue that?
Continue using your social
Yeah,
security number?
just-
Yeah,
I mean, my tax guy hasn't ever told me any different, but, again, he's busy and, you never know what
Right,
might
right.
get lost under the, in the process.
Yeah, we've had clients get ID numbers, and there's a box you can check just for banking purposes, just so that, you can put that on your Schedule C,
Right.
but you're still gonna put your social security number on your,
Right.
on your 1040. So it's still, and both numbers would just end up on your Schedule C, so it's really no different.
I just signed a 1-year lease, and I realized that it does not have an exit clause in it. It was a really cute little 1.5-page lease. I'm not sure who drew it up, but it looked all fine to me, and then I was like, oh no, there's an exit clause. It's only 1 year, so I'm not too worried. But when it comes to renewing, if I want to renew, they want a 3-year lease, and I want to figure out how to insert that exit clause.
You would just negotiate.
Just negotiate with them. Would I want to get a lawyer to help me with that, or is that?
I'm never going to tell you not to get a lawyer.
What if I don't get you?
You end up with a document without an exit clause. That's what happens. But I'm a big proponent of trying to make sure that small businesses don't pay tons of legal fees. You don't have to. You shouldn't have to. And so there's a lot of things you can look at. The internet has a lot of great sites on those things. When you look at those, you could probably talk to attorneys. I've talked to people about that sort of stuff. What you can look at, and I say this with some caution. You can look at these things, know that you're looking at, if you want to go on the internet and look for, an example of a lease, you can do that. You can find good examples, good terms, and that sort of thing. But understand that you may be looking at a really great small business lease in Minnesota. And so, those are the kinds of things to just be aware of. But the terms are kind of going to be the same. So, you can typically add those things in, and it's up to your landlord whether or not they want to agree. And it's up to you whether or not you want to live without that clause. So, you know, you look at those examples, typically those things have kind of a form to them. They provide for, you know, a certain amount of time by which you have to provide notice in order to exit, and you just can't leave in the middle of the night. You've got a 90-day opt-out provision or 60-day or whatever. Most always those terms are going to be governed by what, you know, in commercial leases, they're almost always determined by what the two sides can agree on. So they really are, you know, for tenants of, you know, residential premises, you know, the state has a lot of governing provisions that say, you know, this lease, you know, if this isn't in it, it doesn't matter because, you know, this is what the law is. We're going to override a contract. But in terms of commercial space, it's pretty much dog eat dog. So, but there are a lot of folks that, you know, you can talk to for very reasonable prices, and a lot of great real estate attorneys in town, and you know, to help them all.
I'm getting ready to publish 3 books. One on health and wellness, not India. One was a memoir, and the other one is probably no risk. But in terms of the health one in the memoir, it involves some experience being somewhat of a public figure, and which means that I've involved with other people who were in a similar public capacity. What considerations do I need to be aware of when I'm putting something like that together, and basically telling what experiences were?
You're leaning more toward questions of defamation,
Well, yeah,
liability.
I guess. I don't know what exposures that I need to be aware of, and this is the time to find out.
Are you dealing with a publisher, or are you going to self-publish?
That's how good the book is.
One of the things that a publisher will typically do, and I know just enough about this to be completely dangerous, but a publisher typically won't produce something like that unless they've satisfied themselves that there's minimal risk in defamation suits. And when you talk about publishers, you talk about newspaper publishers and those sort of things, and you'll see, you see the show where they want 2 sources or something like that. Well, they're doing that to protect themselves from liability, because there are 2 types of defamation. There's slander and libel. Slander is the spoken, libel is the written. And for both, truth is an absolute defense. So you can say what you want to about somebody anywhere, anytime, and it doesn't mean you won't get sued, but the success, the chances of succeeding diminish if what you said was completely true. Well, then that begs all the questions. How do you know it's true? Do you have it on video? Is it an interview and you misquoted an interview? You spoke when the video shows that they clearly said X, Y, and Z, and you state that they said A, B, and C. Those are the kinds of things that you get into nasty litigation over. But if you're writing something and you're describing a seminar where you and 3 of your colleagues presented on video, for a university system, you've got that to back you up, and those kinds of things become, that helps. Again, like I said, you can be sued anywhere, anytime for anything, but when you're talking about defamation, those are the kinds of things that take into account.
So, basically, anything that I can document because of a video, something kind of proof, is pretty solid.
Yeah, I think you tend to avoid the chances of successful defamations.
Okay. And you asked if I was going to self-publish or find a publisher. If I were self-publishing, what considerations do I need to have in that regard? Do I need to publish as an LLC?
You're the author, you're the one penning the material, and you still would be the one, yeah, because It just means that your LLC could also be liable. So, you know, that's one of those situations where if the source is coming from you, it's going to be hard to shed that liability. Like owning the farm, that, you know, that connection is not broken. So,
Just make sure everything's really
have your files forever. Send them to someone who's going to protect you, you know, I mean, just to know that your files are, you know, your document.
Thank you.
As far as full-time and part-time, and for John's sake, we'll say part-time, everybody agrees it is 20 hours. Is it more feasible for your payroll taxes, social security and all that to fill like 11 hours a day, 10 spots? Is it more feasible with payroll taxes and social security to fill that with part-timers at different times or full-time? And that's part-time.
Well, once you start paying employees over 40 hours a week.
Nobody will get over 40, it's just.
Okay. So then, you know, what was the gist of the question? Is it more efficient?
Is it more affordable, I guess, for the business with payroll taxes, social security and everything to do all full-time or do part-time and full-time?
Yeah, you know, that's a tough question, because I imagine that the more employees that you have, the more, and I know workers' comp is built on total payroll.
Yeah.
But I don't know if there's a factor in there for a number of employees or
Say
not.
I've got 10 employees or 10.
The only variable in payroll tax that's a per person or per employee type of variable is the unemployment tax for both federal and state purposes. So, and the variable there is for federal purposes, you pay unemployment tax on the first $8,000 of wages per employee, and in Virginia, I think it's $7,000 per employee. So obviously, if you have two part-time employees making $8,000, then you're going to max out that tax twice. Whereas if it was just one employee working 40 hours, you know, making $16,000, just to keep things simple, you'd only pay those two taxes once. So, you know, that's, you know, it does, you know, you got to think about as you grow and you know, you start trying to offer benefits. And there's some benefits, health insurance. You know, when you put in a group policy, you may require 32 hours of to basically jump on the plan. So, you know, this is what's sort of going on with the ACA, where a lot of businesses in America have cut back from full-time 40-hour-a-week employees to part-time, so they don't have to cover them for benefits. Those hourly.
Earlier is better. You cut back on hours, so you don't have to cover the health insurance.
Right. Those hours per employee also impact some of the retirement plans and whether or not people or participants or employees are eligible to participate. So, you know, from an efficiency standpoint, it can be very efficient from a dollar standpoint to have more part-time employees. It also, you know, it probably also gives you some backup in the event of sicknesses and fluctuations in business. But there's nothing like a great long-term employee who's with you, and you know, when you're gone, they're there to cover for you, and they can run your office and keep things running, you know, smooth as can be. So, you know, it just sort of depends on the type of business and the situation, I would say.
I mean, workers' comp's just an estimation, but the time you did an audit, you gotta have your documentation for how many employees you got and how many hours and how much payroll you pay them. So if you estimate the payroll's 30,000 and you did an audit and it's 24,000, and you get a credit. But if it's 36,000 instead of 30,000, then they'll bill you for that, for the difference. And then usually they adjust your current policy period with the new payroll, and you'll have to pay the additional premium at that time too.
I just went through that audit. They ask a lot of questions.
Yeah. Yeah.
Have it all
I mean, you try, I mean, when you do that estimation, you want to try, I mean, especially a startup, you really don't know, because, I mean, the first year is it's just you wing it per se but once you get the estimation, then you try to, if you increase employees, of course, you're going to have increase in payroll.
All these people have budgets and business plans. They know where they're going.
Yeah, right. True, true.
No, you can't do it exact. How much is just a typical, just business insurance? Probably just one employee.
For workers' comp or liability or?
All of it, all,
It really depends on the type of business. What?
Transportation.
What transportation? Where are you going to be? Goods or people?
Yeah, be transportation, transporting seniors back and forth to the doctor and business like that.
There's I really don't know. It depends on how many. There's a lot of what ifs. There's one. I mean, the commercial auto policy is going to probably be the most expensive.
That's what I was thinking. The business insurance part of it's probably not comparable to.
Like if you're renting a spot and you have to have liability because the person owning the building you'd have insurance.
On that,
That type of policy is not that expensive, but if you happen to have workers' comp, and then probably the workers' comp on the employees if they're driving the vehicles, and they get hurt, it's probably, I say the commercial auto is probably the most expensive.
Another factor that you're going to face, you're going to take multiple clients at a time, or just one at a time. So you're not going to take a van load of clients, because the reason I say that is, think about it. Each person there, if you're involved in an automobile accident, each person there has a potential claim against you, and so you run into the exposure for the insurance company is greater. So you look at those things, and underwriting takes a look.
I mean, not all insurance companies do like all the risks. There are certain risks that they have an appetite of what kind of business they want. So
might have different policies for different.
yeah, like transporting people, there's some companies might not even touch it because the liability exposure could be so huge that certain carriers will take it, but you're going to pay out the yin yang.
I have a question to go back to LLCs versus corporations. I think Christina mentioned that in her existing business, she got to the point where it became more beneficial for her to be an S corp versus an LLC. I think that's what you were saying. What are the markers that you look for to say, okay, well, an LLC is no longer benefiting me. I think an S corp might be more beneficial. What are the markers that kind of make the distinction?
My question. I think that's the text.
Yeah. So basically, they come from, whether or not you admit a partner or have another shareholder in their business, and you're not going to treat your business like a cigar box. So when I say like a cigar box, I mean every dollar that goes in the cigar box, you're going to take out every opportunity you get to take it out. So when you start trying to build capital in the business, and building capital means that you're buying equipment, or you're buying furnishings, or even that you have debt. Those things can cause you to start to look at corporations, not only S corporations, but C corporations. And I'll just say C corporations are really out of favor right now, just because when you're a small business, there's a lot of compliance and I'll just say hoops to jump through to move money back and forth with a C corporation. So the S corporation, it's really an S corporation versus an LLC issue. And the biggest difference is that the profits in a LLC are taxed for both income tax purposes as well as self-employment tax at 15.3%. In the S corp, they're only taxed for income taxes. So there's a lot of times in business when, let's just say that you take on debt. And if you think about when you have a note payment that you're paying out of your business, how do you make that note payment? Well, you have to generate profits in an amount equal to your note payment every month to be able to make it. So that what ends up happening is that your profits are a higher number than your cash flow. Okay, because you use some of those profits. They all weren't converted to cash flow because you had to use some of them to pay down your note, your debt. So when you start having some profits on the bottom line that you really can't get out of your cigar box because they went to pay debt, sometimes it becomes more efficient just to leave them in there and not subject them to that self-employment tax.
So if the business has grown to a level of a large
Sustainability, yes. I mean, that's one of the markers.
When we started getting accounts that were real significant, that's when we were like, well, wait a minute, we need to do something with this because we need to handle this properly. So that was the key thing when we started seeing the profits really start to come in. And when we sign on the line and they send you all the money at one time, then you're like, okay, now what do we do?
Well, and the other thing is owner compensation. So what ends up happening is if you think about, you have a business, let's just say that before the owner's compensation, let's say you make $100,000. Well, in the LLC, that $100,000 is going to get taxed for both self-employment and income tax purposes. In the S corporation, you can get your money out of the cigar boxes two ways: as a salary to the owner or as a distribution of profits. So the salary, when you pay a salary to yourself, you're going to incur that same 15.3% in Social Security and Medicare taxes for both the employer and the employee as you would pay for the LLC. So, if you took a $100,000 salary out of the S corporation, you technically have about the same taxable income and cash flow results as you did with the LLC. But the temptation comes in that you say, well, what if I just take $25,000 out in salary and pay that 15.3% on it, and I leave the other 80 in, and it doesn't get taxed for self-employment purposes, but I just take it out just think of it as a sub-S dividend. It's a distribution of sub-S profits. Well, I can save $80,000 times 15%, $12,000 in taxes, if I did the math right, by doing that. So the IRS knows that small business or business has the ability to sort of hide from Social Security and Medicare taxes. So that's a big issue with them. But as we tell clients all the time, my job is to tell you what the law is and what you should or shouldn't do. But you're a big girl, and if you decide you want to play that game, then as long as I tell you, basically what the ramifications are, then that $12,000 liability is out there for you for 3 years. But that becomes another opportunity, I guess, to start looking at, do I move to an S corp? It's not only owner compensation, but it's cash flow, it's retirement plans. There's several items that come up.
You were mentioning paying debts. I got a little confused. I'm not a business person. I'm all on arts. So So, if I take out a business loan as my business,
Right.
and I use my profits to pay that loan down, what, in what you just said, what is going on there?
So, I mean, let's just say that you take out that loan for working capital purposes, just so you have cash in the bank to pay your bills, to handle the fluctuations of the business cycle of your cash flow.
Sure.
So, you take that money out, it's not taxable to you. You put it in your bank account. You start doing business, your first year you have, $100,000 worth of sales and $60,000 worth of expenses. Your profits are $40,000. But let's take that example one step further and say, hey, now I've got this bank loan I have to pay. And each month I'm paying X amount of dollars, $500, okay? And that $500 has principal in it where you're paying down that loan balance as well as interest. So just to keep it simple, let's just make believe there's no interest, okay? The bank loves you. They like drinking wine and making art. So they give you a no interest loan. So all of a sudden your cash flow has gone from $40,000 to $500 a month, $34,000. Okay, but your profits are still $40,000. You made $40,000, and you took $6,000 of it to make your loan payments. Now you only have $34,000 of cash left, but it's all based on $40,000 of profits. So that's the difference.
So you're still
between the
paying
two.
tax on the $40,000.
Exactly.
Interesting. Great. Knowledge bomb.
Can you write, writing things off, can you, like, all this insurance stuff, can that go toward, things that expenses toward the business?
My simple statement is to think of business deductions in terms of, if I wasn't in business, I wouldn't have had to spend this amount. Okay? So if you had to buy an insurance policy because you were in business, it's more than likely a business deduction. If you had to join the chamber or wanted to join the chamber because you were in business and you wouldn't have done it otherwise, it's more than likely a business deduction.
Okay, thank you.
Everybody questioned out?
There's a lot of stuff.
So in the example that Hannah gave about the $40,000 profit in the art store, and she was paying off on a loan, so she was $34,000 in cash. So is that a deduction?
No, because when you borrowed the money, whatever she borrowed was non-taxable. And when you pay it back, it's just a repayment of a debt, of a liability. Now, sometimes you borrow money to go buy equipment. The equipment you can write off, depreciate, or deduct, depending on what it is and how much it costs. But as you pay the debt back, that is just a principal reduction of a liability.
Here's a question about, I'm going to go with what Alan was kind of talking about, the whole, like, you got your EIN number, and now you're going to get some letters of like maybe 3 to 4 months later, paying quarterly for an LLC, a single member LLC. If, as an accountant, as a CPA, as a dude who handles money, what do you need from like a me every quarter in order to make sure that I don't get that letter saying you need to pay us more money?
So I'll back up to the letter. Generally, when you apply for your federal ID number, you tell them what date you're first going to have wages, what date you're going to start business. Okay. So that wage date will determine. They'll send you back a letter and they'll say, here's your ID number, or we give it to you immediately. You do it online, and hey, you got to file a 941 starting this time. You got to file you know, a LLC, a 1065 or 1120S for this year.
Wait, they're gonna tell us?
They'll tell you that in general terms.
Okay.
So, you know, once you tell them you're going to start having employees on September 1st, that means they're going to look for your first payroll tax returns on September 30th. That quarter ended September 30th. Once you register with the state, you're going to do the same thing. You're going to tell them when you expect to first have wages and when you first expect to have sales. And then they're going to start looking for their monthly or quarterly sales tax returns or their quarterly payroll tax returns based upon the month you started business. Also, you know, once you get that entity, you know, when you get your charter from the state, that determines your income tax return, your first income tax return filing requirements. So if you file for a corporation or an LLC and you're a multi-member LLC, then you're going to have to file a partnership return or 1120 or 1120S tax return. If you file for one right now, then your first return is going to be, you know, your year end is going to be December 31st more than likely, and the return is going to be due by March 15th of 2021. So whenever you get that entity, the year you get that entity established will determine, that will be your first entity for filing that entity's tax return. So hopefully that sort of took, so they'll, so and I think in your instance, was it sales tax returns that basically you said you're going to have sales starting July 1st. So the state said, okay, July 30th, I should get a sales tax return from him for the month of July. And when they didn't get one come, you know, August, September, October, they sent him a letter and a $10 bill. And so, you know, even though he wasn't doing business, and generally we can write a letter and say, hey, we weren't doing business and did not, you know, although we got
I called them immediately, and as soon as I got that letter, I was like, I called them immediately. Well, by the time they got it stopped and fixed and everything, I'd already got 2 more letters because they were kind of like computer generated. They were behind. But I don't recall getting the start date on that or putting the start date in. And that's, of course, the federal, they were okay. They weren't okay with it. The state of Virginia understood. And they were like, well, we don't have that. We just assumed this was the date, which, you know, I probably did mess it up, but I'm just putting that out there for everybody else. Don't do what I did. Make sure you cover your bases.
So is it fruitful then to pay quarterly or just to wait?
So that's a whole different issue then.
Yeah, that's sales
income
tax.
taxes. So the other part of your question, so I was just sort of addressing what I thought was the first part, something that he said earlier.
Mine's all sales tax.
So,
and that has to do with things that you're selling, like your like products specific.
Product profit. That you're selling. I was selling trout at my pay lake.
Okay.
T-shirts, hats, whatever I sold, and I was doing it monthly.
Okay. So I don't know that, because I'm just having services. It's just me going.
It might be different for services. I'm not sure, but I'm just
So Mike,
talking
is
about.
it a good idea to go ahead and file those like a sales tax form and just put zeros on it?
yeah, I mean, if you told them you're going to start having sales July 1st, they'll generally get the form to you in time to file, and you just put zeros on it and send it in.
So that's not related to your EIN number, it's related to when you said you're gonna start having sales tax.
Right, or payroll tax on your
Sure.
federal EIN application.
Okay, so.
I don't remember.
If I have a CPA, they should be able to answer this for me. Okay.
I'll tell you.
So then,
With it next week.
so then back on your quarterly estimated tax payments and income taxes. Yeah, so, you know, the IRS basically wants you to pay your taxes throughout the year for the year. The problem is we don't know how much to pay. So they've given us 2 what they call safe harbors, that if we meet those safe harbors and pay that amount of tax in ratably throughout the year, we will not owe interest or penalty on any balance that we don't get paid in and have to pay with our tax returns the next year. So there are 2 safe harbors. One says that I'm going to pay in 100% of my prior year tax this year via withholding or quarterly estimated tax payments, regardless of how much money I make. The second is, I'm gonna pay 90% of my ultimate tax this year via quarterly estimated tax payments or payroll withholding. So generally, as you start a business, your target's at 90%. So initially, what we do is we'll let you float along for a couple months, sort of see where you're going. Once you start to get profitable, then we keep our hands on you and actually say, well, this is where you are, this is where it looks like you're going, here's your tax, here's what you need to pay in by January 15, 2021 for 2020, okay? But in the same instance, or by the same token, if you're making a lot more money, we'll just look at you quarterly and say, here's your profits for the quarter, you annualize it, and then calculate the tax, divide it by 4, and pay it in.
So in general, if you're having more profit, it might be better to do quarterly.
Well, you got to do quarterly either way.
Okay.
But how deep we dive into trying to figure out what that number is, really depends on, the velocity at which you're generating profits.
Do you have to do quarterlies?
Only if you don't want. So here's an example I
You get a
use.
penalty, right?
Yeah.
So you don't really have to do it.
If you don't mind paying about 6% interest plus another 2.5% penalty, no, you don't have to. But here's the instance. The example that I use.
Can I ask you a quick question?
Sure.
So the government wants their money before anything.
Before you file your return.
Before
yeah.
you file a return or anything, it's kind of ironic that they would want their money before they even know how much profit you're going to make or get. So how is that beneficial to a small business?
Only from the standpoint of trying to smooth out your cash flow, plan for that, for those payments that you might otherwise have to make if you don't do it. That's the big issue, is really understanding where you're going before you get there.
Is there a certain percentage we can kind of start saving back in the beginning, or does it just depend on?
It all just depends.
Okay.
I've always found it easier to pay quarterly on that because I don't hurt as bad writing little checks as I do one big check at the end of the
Yeah,
year.
you don't want to forget at the end of the year, so I can lighten up to cover your taxes.
Yeah, yeah. It really.
So, yeah, it's more complex as you're growing a business. By the same token, if you have a year where your income's going down a lot, it's a lot easier. Because then you can just say, I'm sorry, if your income's going up, it's a lot easier because you can base it on the prior year's safe harbor. So let's say you made $50,000 this year and paid $2,000 worth of tax. And then next year you think you're going to make $100,000. Well, your tax is going to be $5,000, but your required estimates will only be $2,000. So our job is to say, when we do your tax return and say you owe $2,000, where are you going? You say, well, I'm going to double my income. And our job is then to say, well, looks like you're probably owe $5,000 of tax. I'm only going to have you set you up for $2,000 in estimates, but I want you to save this $3,000 throughout the year, and then we'll adjust in the third or fourth quarter when we see what your numbers really look like. So basically, we're giving you almost 6 months to leeway or lead time to see where you're going by the time we get to the third and fourth quarter.
Well, I do each week, I set aside a certain amount of money. Because where I've been in business for a little while, kind of know what my level is, you know what I mean? So what I do is each week, when I tally the end of my week, I will set aside a certain amount of money that I do not touch. And if you start at the beginning and get that structure, it's not so hard when you're, like, if you're at the bottom and you're starting up and you're at a little cash flow and you get a little extra, but as you get bigger, you've got a lot more structure and you're more sound. And so when you do go into that quarterly, then I can send what I've put back for those weeks. I can go ahead and send it in. And then at the end, I still usually have to pay a little more, you know what I mean? But it sure beats coming up $5,000, $10,000, $15,000 at the end of the year. and you're like, whoa, because it is not a good thing you wanna do. So if you kinda get in the mindset, even if it's $50, whatever, just go ahead and get that in your routine. And it sure makes meeting Uncle Sam a little nicer.
A lot of times your tax preparers can, you know, and I'll just give you a simple example to somebody who just does consulting. And they say, hey, I'm gonna make $100,000 next year. Well, we can project, you know, if you make $100,000, you're gonna owe $28,000 of tax. So therefore put 28% of every dollar you bring in the bank, and then I'm gonna set you up on estimates, and you pay your required estimates out of that fund, and we should be pretty close by the time we get to the end of the year. But, you know, some businesses you have to look at it, instead of top line sales, you look at it from profits. So, you know, as you give them their tax as a percentage of their profits, so that at the end of each month, they can say, well, I made $15,000 this month. Mike says I need to have 40% put away. So that's what I'm going to put away of my profits this month. It's all about planning. No surprises.
So quick question then. I wouldn't need a CPA if I wasn't in this business, so I can use that as a deduction too.
Absolutely. Attorneys too. So who knows what the first line of defense against taxes is?
Lawyers?
Taxes. Not tax collectors. Retirement plan.
Yeah.
So as you become profitable, you know, you start looking at, how do I start saving for retirement? I'm just making a simple statement here. When you put money in an IRA or start a business retirement plan, you're taking money out of your right pocket, putting it in your left pocket, and getting a tax deduction for it. Yeah. Okay? That's a simple analogy.
Small business owners have a lot of great options for retirement accounts, much more so than working for a corporation or any other business. Small business have a lot of opportunity out there for retirement accounts.
Can you talk about that a little bit?
Yeah, there's several different types of retirement plans. So, you know, as you start to grow, you might just look at something as simple as an IRA that lets you put $6,000 a year into it. As you start to grow from there, your next simplest step is to do what's called a simplified employee pension plan, which is you know, as long as you don't have any employees, you can put up to 25% of your business profits into that plan.
What's that called again?
SEP, Simplified Employee Pension Plan. So, you know, with either one of those plans, you sort of have the flexibility to determine how much you want to put in. IRA up to $6,000, SEP up to 25% of your profits. Once you start to have employees, then you're exposed to having to put something in for them. So a SEP plan generally becomes less efficient for you, because whatever percentage you put in for yourself, you have to put in for them also. So all of a sudden you say, well, I don't want to put in 25% of my employee's salary as a contribution. That's too much. What else can I do? Well, the next step or the next plan to consider is what's called a simple plan. And it is an IRA that basically says if your employee can defer part of their pay up to $11,000 per year to put in their plan themselves. And if they defer, you match them up to 3% of their pay. So your only exposure there is 3%. For yourself in that plan, you can maximize your deferral at $11,000 or $12,000, whatever it is now, and put in the same 3% for you. So, you know, most of the time your employees aren't going to take advantage of it, you know, to the extent that you are. So they're going to put in, you know, $2,500 or $2,000 a year, and it may be, you know, 2% of their salary, or maybe 5% of their salary, but you're only going to have to match them up to 3%. But you still get the 11 or 12,000 plus the 3% for yourself. Beyond that, then you start looking at 401k plans when you have employees. 401k plan is pretty similar to a simple plan. Your exposure is 3% for your employee, as long as you just want to do 3% for you. But then you can make non-elective contributions, and there are people called third-party plan administrators who help with the allocations and find ways to meet your goals, whether your goal is to maximize your contribution and minimize your employees, or to be as fair as you can to your employees. And the 401k, there's also an option available for you if you're just self-employed and you're the only employee, and let's say you really start knocking it out and you want to put $50,000 in a retirement plan, then the solo 401k is going to be the way you want to go. The drawback to it is it comes with an administrative fee of somewhere around $1,500 a year for most plans.
And Mike, any advice for all of these folks looking at starting or have an existing business about succession planning? Preparing for, are you going to sell it? What if something happened to you and you own it? What do you want to do with the business?
Yeah, it's something that you always have to be aware of. Be aware of what exposures you have out there that might arise if something happens to you. Are those liabilities or debts or problems going to fall back on your family or your partners? But yeah, I mean, business succession is something that you have to actively consider. You should look at it every year and just make sure that the dynamics of your business haven't changed. The situation overall. You haven't admitted partners. You have buy-sell arrangements with partners. That's the biggest problem I see with partnerships. We haven't even touched on it. Is every partnership or every LLC that's multi-member should have some type of operating agreement that governs how the partnership's going to be run, how people are going to be compensated, how people get in, how people get out, how profits are going to be allocated, what everybody's duties are within the partnership. You can probably expand upon that. Generally, if two people come to me, or if somebody comes to me and says, "Hey, I'm thinking about it, looking for a partner," I really beat them up real hard to make sure to say, "Hey, do you really want a partner? What is your reasoning? Is it you sure it's something you can't do yourself?" Because I don't know what the statistics are, but I would say, more partnerships than not fail.
I think they're a little worse than divorce statistics because you don't have the emotional time. One of the things that Mike was talking about, and I always try to talk to clients about, when we were talking about adding a member to your LLC, you want to be able to set that up to add, I think, unless you just really want to be a hermit, because, if you find someone with like talent and like skills and like, ability, then they're going to expand your business, and that's going to be helpful. Plus, they're going to cover for you when you're gone. Those things, those are just the small considerations. But, more philosophically, I have two family members, for instance, and they both have sole businesses, and they both are making a small fortune, and they are both very, very, very difficult to deal with. You wouldn't want to work with either one of them, and that's why they don't have partners. But the reality of it is, for both, and they're family members and not clients, but just in conversation, neither of them have a succession plan, and they have booming businesses. So, to me, if you spend your life doing something like that and you build something of value, there's a natural ability to get that added value by selling it to someone else who's coming along and starting. And so I think when you look at that's should always be in the back of your mind. Plus, then in addition to that, when you think about it, Mike mentioned, and we didn't talk about it, but when you set up an LLC or you set up a corporation, you're required to have what's called an operating agreement, or bylaws for a corporation, operating agreement for LLCs. And those can be as complicated as you want them to be, or they can be fairly easy come, easy go. But those determine how you are able to sell your interest in the companies typically. So, you know, when you start, and my point being, when you start your company, when you start your LLC, even a partnership, you can have, you know, a partnership agreement. But when you start those, you are actually setting down the foundation for how you get out of it. So, you know, always something to consider, whether you want to do it now or 4 years from now. You know, and most all of those agreements can be changed relatively easily. So as your circumstances change, you can change those agreements, and you can provide for additional people to come and go. So, you know, I think when you look at those, you always consider the possibility that what you have built up has its own intrinsic value that you can sell.
Where do you file those? I mean, is it a document that has to be legally ratified?
So like with an operating agreement, so if you and I had an LLC, we would come to terms on what we wanted, how we draw our cash,
Right.
you know, who's going to make decisions about employees, who's going to make decisions about purchases, you know, those sorts of things. And when we go back and forth, typically, they usually, you can find forms to start with, but again, same caution with forms. But you individualize that, and then you sign it, and that becomes your kind of binding work. Those agreements also typically contain the formula for changing those.
Sure.
So
But your signature, and then it goes in your filing cabinet,
you
that's
put it
good
away.
enough?
Typically don't have to share it with anybody. You know, it's a private document, so it becomes important when, and if you do, and then in some cases, audits, you know, those things, it becomes important for when and if you do decide to bring that to somebody else or sell your interest. That's, you know, things like right of first refusal. You know, you and I may have our LLC, and we understand that we can get out of it, but if you decide to get out, you give me 90 days to buy you out first before selling it to somebody I don't know.
Right.
Those are just typical additions or typical elements in the agreements like that. So, and they're good. I think you look at them, they help you visualize your company. They help you see what you're doing. They help you understand what you want and how you operate. And then you know, because you deal with things like cash flow and when you can get a loan and how you go about it, and what consent you have to have. And so you kind of have these ideas in mind, and they serve as the framework for what your company becomes. Anybody else?
Any more questions? I'd like to thank the three of you. Let's give them a also like to say they're very good members of the Chamber of Commerce. So thank you for everything that you bring to us. Okay, now is our decision. Are you going to be a startup? Are you going to be an existing business? Question?
No, you answered the question.
What's the guideline for like?
Guideline.
For a month?
Okay, a guideline is up to a year. You can be a startup. Then after that, you're considered an existing business.
Am I allowed to sign this for him?
Yes.
Just
put
sign
your-
his name or my name?
I would put your name
And then
for
him.
him. Any other questions? Okay, let's not forget, next week, we're going to have another exciting session. It's going to be credit and managing a business. And that's going to be Cindy Snyder, from DCC. And then also Carl Nolbeck. Did I say that right? Noblick from the SBA. So that's going to be a great session. Also, don't forget, next Wednesday, we've got our new knowledge, and it's going to be on customer service. So if you don't have any other questions, we will be adjourned for tonight. And make sure that you hand us your rules of form.
We did this to you.
Thank you. Just write it
Great.